Hello ladies and gentlemen, my name is Chris Leyland and I'm the Deputy Chief Investment Officer here at True Potential. And what I want to do today is basically discuss the recent rises in UK interest rates and how will this actually affect investors. So as I'm sure you'll all know, interest rates in the UK rose by 0.25% to 0.5%. And that's on the back of two things really. Firstly, the Bank of England is very cognizant around their inflation target. So they're currently 1% above target when looking at inflation. And secondly, there's also moral hazard around low interest rates which discourage savers. If we look at what happened in the stock market, there wasn't so much movement as everything was very much well communicated to the market and everything was very much priced in. If we look at now, actually, how has that affected investors? And if we start off by looking at mortgage rates, and as you can imagine, lenders have immediately passed on that higher interest rate to homeowners. So what you're seeing is someone with a £150,000 variable mortgage in the UK will now have a higher repayment of around about £21 per month. What's happening with savers, and actually it's slightly the opposite. What you've seen is not that many lenders, not that many banks have actually passed on the higher interest rates to savers. And what you're seeing is actually people with cash accounts, people with cash ISAs are receiving incredibly low, depressed interest rates. So what can you do as an investor if you're looking for a higher income, if you're looking for higher interest rates? Here at True Potential, we offer our income portfolios, so we have both cautious and balanced income. They both offer a yield of just under 4%. So for an investor who's looking to put money into the stock market, this is a good way to gain a solid income. Thank you very much, and I'll speak to you all soon.